It feels like a splash of cold water to the face, but there's reason to be optimistic about the stock market in the weeks and months ahead. The market has been making headway in the early weeks of February, shaking off inflation and rate hike fears and the scare of Omicron. Tesla stock traded above $1,200 a share in early January, putting it close to its all-time high of $1,243.49. Wall Street, for its part, appears to believe the stock is worth roughly 100 times Tesla's per-share earnings. That is about 10 times more valuable than stocks of traditional automakers, but it seems about right, based on one valuation methodology. Wall Street is getting more bullish about Tesla stock, but greater optimism among analysts hasn't been enough to lift the price, given fear of higher interest rates. Would Tesla stock be as valuable as everyone thinks in the future? Keep watching to find out. In January 2022, Goldman Sachs analyst Mark Delaney increased his price target for Tesla stock to $1,200 from $1,125 while maintaining a buy rating. Delaney also named Tesla a top pick for 2022. He placed Tesla stock in the outperform category and called it the best idea in the electric vehicle sector. Like Jonas, Delaney also cited Tesla's leadership position in electric vehicles, adding that global electric vehicle adoption trends could act as a boost for the company's sales. Tesla Incorporated CEO Elon Musk has told his employees that he agrees with the Cathie Wood-led ARK Innovation ETF that Tesla is worth $3,000 a share if they execute well. In a recent interview, Cathie Wood said that her base case on Tesla is $3,000 a share. Our estimate for Tesla's success has gone up, she said. The main reason for that is their market share, so instead of going down from year-end 2017 to today, it has actually gone up fairly dramatically. Despite the coming avalanche of electric vehicles from Ford, General Motors, and Toyota, famed investor Cathie Wood is staying very bullish on one of her longtime favorite companies, Tesla. However, Wood's price tag for Tesla might look outrageous. Tesla is currently trading at $860 a share, and it would have to go up above 300% to reach that price target. ARK Invest believes that Tesla is going to deliver between 5 and 10 million vehicles as soon as 2025. It also says Tesla will deliver a completely autonomous ride-hailing network, known as Tesla Network, that is going to bring in a lot of money with a high margin. In an email to Tesla employees obtained by Electrek, Musk highlighted ARK's new $3,000 price target and added that he concurs with ARK's analysis. If we execute really well, I agree with ARK Invest, Musk said. A $3,000 share price would put Tesla's valuation at $3 trillion and make it the most valuable company in the world. Presently, the automaker is the most valuable automotive company globally, at over $730 billion. Musk has often commented on Tesla's stock price. Last year, when Tesla's stock was reaching a new high, Musk told his followers on Twitter, "Tesla's stock price is too high, IMO." A Tesla investor sued Elon Musk and the company board, saying the CEO's erratic tweets violate a settlement with the U.S. Securities Exchange Commission. His comment resulted in a more than $13 billion loss in Tesla's market value. In September, ARK Invest shed less than 0.5% of its position in Tesla as the shares of the electric vehicle company climbed. It sold a total of 8,100 shares, estimated to be worth about $5.76 million. Now, however, Cathie Wood has been on a buying spree of Tesla stocks as the price continues to dip. Tesla remains a top holding in several of Wood's closely followed innovation-focused ETFs. The firm's flagship ARK Innovation ETF, for example, counts Tesla as its top holding at 10.49% of the ETF's holdings. Wood added that the new EVs from the more established automakers would only validate Tesla's strategy. Moreover, Wood struck a bullish tone on the market potential for EVs in China. Tesla is beginning to see some recovery in the market. Busting out of a two-day losing streak, shares of Tesla were up 3.1% as of February 14th in response to a bullish note from investment banker Piper Sandler. As StreetInsider.com relayed, Piper Sandler decided to give Tesla some love this Valentine's Day, reiterating its buy rating on the stock and raising its price target to $1,350, implying that new buyers can expect to see as much as a 55% gain on the electric car company's shares this year. Updating its valuation to account for new forecasts, deliveries, capex, and margins, Piper says it expects Tesla to generate more cash going forward, such that the stock is now worth more potentially. Morgan Stanley's Adam Jonas said that the current landscape for electric vehicles was a race, and Tesla was winning it. Think of the EV race as a marathon, he wrote. Tesla is in the lead at mile number 21. Everybody else is at mile 2 or still tying their shoes. According to Jonas, recent record deliveries of its cars were proof that Tesla's position will become stronger as the marathon progresses. He revised his price target for the automaker shares to $1,300 from $1,200 and predicted delivery figures to be about 2 million for 2022. Tesla delivered 936,000 vehicles last year and plans to increase that figure by 50% this year. The enthusiasm of analysts for Tesla stock has centered around the company's operational expertise. During the pandemic, when established car manufacturers struggled with chip shortages and supply chain bottlenecks, Tesla pivoted between suppliers by rewriting its software to keep its factories working. It also opened 2 new manufacturing facilities in Austin and Berlin to augment production. These facilities will bolster Tesla's bases in Shanghai and Fremont, California. Collectively, the developments mean increased operational margins and scale to manufacture its vehicles. The opening of the Berlin and Austin plants offers an opportunity to achieve even higher gross margins, which we expect Tesla to eventually reinvest into product, service/network expansion, and price. Already, the company's cars are among the best sellers in several countries, including the United Kingdom and Norway. Tesla still has a long way to go before reaching these huge heights, though. The company faces a lot of potential issues which we could see playing out in the future, though we have no doubt Elon Musk will be able to pull through. It would be interesting to see how they get past these problems. For one, Tesla cars are still too expensive. Even with generous government incentives such as tax breaks for alternative technology, potential consumers of Tesla's Model S are still faced with a large price tag that starts at $94,990 before any incentives or discounts. Even Tesla's new lower-cost option Model 3 is $43,990 before tax and incentives and gas savings, which is still out of reach for most drivers. The cars are not only expensive for consumers to purchase, but they're also costly for Tesla to make. Vertical Group analyst Gordon Johnson estimated that the company lost roughly $14,000 on each of the Model 3 vehicles it sold in 2018, although these figures may improve as the company scales up. Another potential issue is that Tesla could run out of batteries. One of the early problems Tesla executives ran into was a lack of batteries to power their products. Tesla's world-renowned Gigafactory, which is still under construction in Sparks, Nevada, is supposed to solve the company's battery crisis. The lithium-ion manufacturing plant, with a planned footprint of more than 1.9 million square feet, projects to help ramp up production to more than 500,000 Tesla cars annually. Major projects such as the Gigafactory are often plagued with logistical or regulatory hurdles, and it remains to be seen if the factory can be completed on time. The Nevada government has given the green light to the Gigafactory, which is expected to produce $100 billion in additional economic activity over the subsequent decades. There's also increased electric vehicle competition. Other companies that plan to enter the electric vehicle market in the next few years include Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW. If this happens, then Tesla's market share may start to get crowded. Some tech companies may also join the fray. Apple Incorporated believes it can challenge Tesla in the transportation industry, and Google has also placed bets on the auto industry. Tesla is admittedly concerned about businesses with broader existing consumer bases. Tesla has a long way to go, but it's a good thing they're already miles ahead of their competition. Owning a Tesla share right now means you're potentially sitting on a lot of money. What is your price prediction for Tesla stock in the future? Comment down below.